Good evening, everyone, and happy Easter. Welcome to our Week 15 recap. Going to be taking a look back at the markets over the short holiday week and see how they played out. So let's jump right in. Last week we saw a nice upside across the cattle market. Saw this June 25 live cattle contract push higher all week long, with prices opening up here just right around $1.97 and the 50-day average. Early push above our bull pivot at $1.9940. This was our bull pivot last week and the prior week's high. We did see prices push up above that and recapture this 20-day average early in the week and keep grinding higher. A nice low volume grind up, showing the bulls are taken back over after seeing this recent shakeout and volatility kind of shake things up. But the bulls remain strong and confident and should keep seeing this market drive higher. Same story over in the feeders. Saw a nice low volume grind higher last week. Prices opening up above the 20-day average and the prior week's high. Saw 4 days of upside with prices closing up here right around 287 on the highs for the week. This was a good push by the bulls following that shakeout and volatility throughout early April. We should see this upside continue. As long as there's price trading above this 279.50 mark, we should see any pullbacks in this area be supported by this 20-day average and that prior week's high. But pullbacks, this market is strong, so a pullback might not happen. If we get a nice push above 287, that should just keep carrying this market towards $3. That's going to be what this feeder market has its eyes set on, is that nice round number at $3. So look for prices to keep marching towards that here in the near term. Next up, we got our corn futures. We are rolling into this July contract, getting rid of the May contract, so be aware of that going forward. Last week we saw prices just balancing out right around the 490 mark. Prices weren't really in a hurry to get anywhere. This was an overextended territory, reaching up here after this nice bullish breakout above the 50-day average. We would have liked to have seen a deeper pullback and find support down here near these moving averages in the 480s, but this market remained strong and just kind of hung out up here right around 490, with last week's low being 487. Going forward, if we get below this 487 mark, just would expect to see a support step in somewhere down here near these moving averages or this breakout level at 477. But this pause following this recent strength is showing this market is still showing relative strength, and was able to show good upside during all the volatility in early April. So expect the bulls to be strong here, and the early push above 494 should get this thing back up into the $5 in no time, and we could be sniffing out some of these prior highs dating back to February. So be ready for the bulls to keep pushing this corn market higher in the week ahead. Next up, we got crude oil. Crude oil had a pretty quiet week, bouncing out early before seeing a rally near the 20-day average to close out the week. Prices didn't quite get there, got up to 64.18 was the last week's was our prior week high. We should be seeing resistance step up here anywhere in this mid 60s area. These prior lows and these moving averages are going to be a good spot for the bears to be looking to step back in and push this market lower. We are seeing a nice downtrend here, just seeing a pullback following this visit to overextended territory down to 55. This oversold levels was just due for a pullback and a bit of a relief rally here, which we saw last week. We could still see continued upside early in the week, but be ready for the bears to step in here in the mid 60s. We want to see price balance out and find a turning point before getting committed to the downside. But do expect the bears to keep pushing this market lower in the near term. Could see a continued upside to pull back here, but big picture, we do see the bears taking back over and pushing this market lower. Equity markets saw continued downside last week. Saw early balance right around just below the 20-day average, showing resistance up here early in the week before giving up and getting back down below 5,300 on the S&P. The Nasdaq also losing ground. The Dow, all of these markets looking pretty similar. The Dow looks to be the weakest. This still not a very good environment to be involved in equities. I do still encourage a defensive approach here. There are certain corners of the market where you can find good names that are acting right, but As far as the big picture indexes go, we still got a lot of chart crimes to clean up here, and a lot of the big components and underlying names of these indexes still need to pick up the pieces and build a nice tradable base before committing to any long-term upside. So, in the meantime, bears are in control. Wouldn't be surprised to see price stay inside this nice wide range that we carved out early in April. New lows are still a ways away, but we should just see a nice wide range trade around here while this market tries to shape up and build a base. Encourage a defensive stance here going forward, but we do see potential signs of areas we could be looking for recovery going forward, but we still have a ways to go before we can clean all that up. So that's all we got for Week 15's recap. Hope everyone had a happy Easter weekend, and have a good night.